All right, guys, TG here. Let's see if we got everything up and running. I had to do a quick switch over from our options room over to, let's see, Facebook and YouTube and Periscope, which is Twitter. So we should be all good. I wanted to give it a couple minutes to get people in here since we had to post things a little bit late. But yeah, wanted to go through here. If you guys have any questions about who I am and any services I offer and training room and education, all that kind of stuff in the Moxie Indicator, come over here to profitpilot.com, and then more specifically, you can click on services and all of that. So let's get into this. Now, when I was in the options room, I was hearing that there was a bit of news coming out there but I think it was something about Russia wanting, as John Carter was in the options room in the chat, and cracking a little bit of jokes, but he's like, yeah, it looks like Russia wants to get some more real estate. So they want to up their real estate game. And that seems to have changed, some bad news out there in the market, and I think we saw the market kind of do a little bit of a wiggle. Now, what I've been talking about over the last few days is the UVXY. Now, the UVXY basically follows the S&P. Doesn't follow the IWM. It doesn't follow the NASDAQ. It follows the S&P, or at least that's how it's related to. Now, the one thing that I will be talking about is, in through here, we saw the UVXY start to pop up. And this is what we also saw with the market recently start to move down. Now, Jerome Powell testified on Tuesday, and the market flipped out on Monday, then bounced back on Tuesday after he was speaking for a little bit. And that's and basically, according to the UVXY, I was prepared for that move to the upside in the market. So what we can see here is that's where price started to fall back below the hourly 50, and in fact you can see that this was an inverse trampoline move on the hourly time frame. So price over the 50, but the Moxie indicator below 0, that's an inverse trampoline move, and you only know that if you have the Moxie indicator. Now, I know there's that news, that little wiggle that came out. The thing that I'm going to be looking at to help guide me about the future of the market, of the S&P, if it's going to be going up, because we know it's tough out there. We got interest rates going up. We've got inflation going up. We know the Fed is going to be probably raising rates, but they're going to keep printing. That's my understanding of what I interpreted their words on Tuesday when he was testifying. So what I'm going to be looking for is, now that price on the UVXY has broken below the 15-minute 50, here and here, I'm going to be looking for to see if the UVXY continues to stay underneath the 15-minute 50, and if that's going to help us show that the market wants to go up. So if this thing starts to change, and if we start to see the UVXY change course and go back up, that's going to be putting a lot of pressure on the market, and it's going to be problematic. So if we go back over to the S&P, and let's see, I've got a lot of things running on this computer. I'm masking a lot of it. And if we look here, it is challenging. The one thing I will say is, on the weekly time frame, we are still over the weekly 21, but it's getting risky. The other thing I will say is that if the market wants to move down, it could, because I talk about the distance between 8 and 21. Well, you'll notice there is virtually no distance between that 8 and 21. So if price wanted to roll back over It could, because the 8 could go below the 21 pretty darn easily. All right, I always talk about that moat situation, big distance here. You can see it finally narrowed and crossed, and here it crossed, and we're at that position again. The daily Moxie indicator is not giving me much information. In fact, it's still below 0, so that could be problematic. And the same thing with the hourly. We're going to have to keep a close eye on this. Now, my near-term guide, just like UVXY, is I'm going to see if price can hold the 15-minute 50. We're still right there. So we're going to have to really take this day by day. Also keep in mind we do have the market is closed on Monday. And then we kind of switch over to like this one. Yeah, you can see here on the weekly, we do still have price riding the weekly 21, and that's great until it's not. And then we'll have to look at the NASDAQ. Let me get that over here. Sarah, I'm sure you're out there, but I forgot to I realize that, while I'm here at my parents' place, this is where we usually have issues with the restreaming. And fingers crossed, we're only a few minutes in, but so far everything's looking good. And so we've been having to do a lot of detective work over at my parents' house due to the internet and having to change a lot of the components because for some reason the old components don't like me doing this kind of restreaming. So now with the NASDAQ, you can see we did break the weekly 21. So we're going to have to look at this and see if it's an issue. Now, before it has punctured it, it's gone a little bit deeper, but it's recovered. And we need to make sure that this isn't price flagging sideways until it starts to actually go down. That's a concern. And I did have that concern last week because you can see here, the Moxie indicator was below 0 despite price being over the 50. That's an inverse trampoline move. And that is why, at least for the NASDAQ, we saw that it was weaker than the S&P. So be careful about that. Clearly, we are seeing a pretty big bounce and a reversion. We're just going to have to keep an eye on this thing and see if it's actually going to be strength going forward or if this is a bounce into resistance. The IWM, I think we have all known and seen this, that basically since that false breakout that we had a few weeks back, you can see that nice bump up and then roll over again, that this is bad. This is problematic. Growth is not in. I've definitely been seeing a rotation into safer names, into names that are basically not going to disappear because they've been around for 100 years. Not names that still need a lot of loans and servicing of that debt in order to survive, a lot of R&D investment. Money is going into companies that have cash flow and don't have a whole lot of debt because interest rates are rising, and that's going to be putting a squeeze on their profits because they're going to have to pay more to service those debts. So we saw this false breakout here, and then I've been warning about this bounce right up into the underside of the daily 50. So that looks problematic. And basically at this point, the question is this low going to break? And if it is, when? When is it going to break? On the hourly chart, let me kind of zoom in on that. Computer is taking a moment. What I would say is that might be right now, because if you see here, we have price running right smack into the underside of the hourly 50 with the Moxie indicator below 0. So yeah, this could be the beginning of the IWM actually starting to move down. Now, it has been said that the markets can go up, that they don't need the small caps to participate, but I am a little concerned. I don't know what it's going to do when the small caps go down. Can the market still survive if the small caps start going down? That'll be a question we're going to have to be looking at. I think that sometimes they can be a little bit of a canary in the coal mine, so to speak, and you can watch that maybe something is beginning and the IWM, maybe it starts to trend down. Like it's been trending sideways for 10 months, right? And the market's still basically been okay. But what if the IWM starts trending down? Well, it could be the sign of things to come, and it could start to pull the rest of the market down too. We do need to be careful about that. Basically, the strongest index out there, other than the S&P, is the Dow, and that's because we've been, as I said, blue chip, old school, names that have been around for 100 years, that they can handle recessions, they can handle whatever, and they're most likely not going to go belly up. Maybe they have dividends, they have good cash flow, and they can ride through stuff. So look forward defense. Venus, yes, I have been hearing talk about Chinese stocks, I'm not quite ready to play them yet either. In fact, one of the traders, he and I are really good friends. He's got his own service out there. He and I talk often and a lot. And he was kind of saying, hey, things come and go in the market. Things that used to get beaten up then become leaders, and leaders stop becoming leaders. Things change. Leaders can't always be leaders all the time, and things that get beaten up become value, and then they start to move up. I think in a way that's actually Kathy Wood's stance right now, because she's talking about a lot of her stuff being in deep value territory, which, hey, that might be the case and that might be great for investors, but as far as us who are more traders, they're just not ready to go up yet. So even though they might be deep value, I don't see a lot of those stocks as being ready yet. Chinese names might be along those lines. I mean, Chinese names have for the last, gosh, a year have been just getting brutalized and beaten up, and it's because their government was cracking down on a lot of things. And that might still be an issue. We don't know yet, but it looks as though we got Munger, we've got um, Charles Munger. I forget some of the other people. Some of the big investors are starting to buy into Chinese names like Baba and Baidu because they see them as being in deep value territory, right? They're the kind of people who they're going to be moving billions of dollars, and they're looking for kind of the next wave that probably is going to last 5 years or something like that. They operate differently. So from my understanding, they have been basically buying in through here, and they're probably buying and adding into here because they would probably, again, this is all assuming that they're right, and this is all assuming it's going to work out. I'm just trying to talk about the concepts and the themes out there. You know, they don't want to be buying up here. That's not their thing. They're selling up there because they were probably buying down here. So what they've been doing, because again, they've got billions of dollars and they've got a long time horizon. If they would, I know that they've been buying into Chinese stocks. Some of them who believe into that have been buying into this area. It's fine that it's still gone down for them because what they are looking at is they're wanting to buy in through here because they think that probably over the next few years it's going to go back up here and then they'll sell again. So they have a much different, they're fine with all of this stuff. I'm not fine with this stuff yet because it would be disastrous to me if I'm buying here and price goes down here. I need money, like I don't have billions of dollars that are paying service charges and stuff like that. I need to be right. I need to have this stuff move the direction I need to. So I need to be buying here, and I need to be buying here, and I need to be buying here, you know? And so we're not quite there yet. I do see that, say, with FXI, price is going down, the Moxie indicator is up. I'm seeing that. In fact, you can see even here that there was a bit of that undercut and then rally. And in fact, on the hourly chart, that was a trampoline move. Nice. So there was a beginning of a move. This is starting to look constructive, but I'm not quite ready yet because if you look really at the weekly chart, we're just not at an uptrend yet. For me, an uptrend is basically when the 8 starts to cross over the 21. Or if I can be a little bit more precise, maybe on the lower time frame I could have started getting it right there, but I'm not ready to get it here. And so what if you take this and you compare it to where we are now? We're not there yet. Do you see how far below the 8 is from the 21? You can see that here too. Like look how far the 8 is below the 21. You'll see the same situation. And you'll see it here too. Look how far that 8 was below the 21. I'm not ready to go in until I start seeing that 8 get closer to the 21 and then the 8 cross over the 21 because that's what I want to see. El Wiener, so can you see my charts? Can you kind of see what I'm drawing and everything? Because I understand that you probably can't see the letters. This is the FXI. This is the Chinese ETF, basically, of the Chinese economy. It's like their S&P. So I just want to make sure that you guys maybe can't see the ticker, but I want to make sure you can see what I'm actually drawing and talking about. So I know FXI. Let's look at Baba and Baidu. If this thing wants to go, come on. All right, Baba. Sorry for the slowness. Down here, my internet's kind of slow. That's why I want to make sure you guys can actually see the charts and it's not just a whole bunch of blurriness. So, Baba, Baidu, yeah, there might be moves. Now, again, for me, and what I'm doing to try and find swing trades, not necessarily day trades and not necessarily investing, but I remember just a few weeks ago, a lot of people were talking about BABA right there, and because there was a move. Well, really, that move was just an oversold bounce. It wasn't ready to go up, and clearly it wasn't ready because price came down. Now the question is, maybe this is ready because maybe there's the positive divergence. We're starting to see some better setups here on the hourly chart. Sure. Maybe this is the beginning of these things starting to move up. But as you can also see that BABA has been going down for a very, very long time. I mean, at least a year. So sure, if this is the bottom, there will be move after move after move. Like, you're not just going to miss this stuff. If you want to start catching these things, sure, you can start trading them, but realize that as it bottoms and as this thing starts to try and turn up, there are going to be up moves and down moves, up and down, because it's trying to transition from a downtrend to an uptrend. And in that transition period, there's up, down, up, down, up, down. Okay? And it's different than the up and down that's in an uptrend because, buy the dip. You can buy the dip when you're in an uptrend. But when you're transitioning from down to up, the ups and downs can be equally sized. And they can keep going lower and they keep going higher and they can just do this. So unless you're just trying to position and hold and you're starting to build a position here for the next, I don't know, 2, 3, 4, 5 years, something like that, then you need to be careful because these things will move up and down on you. And we still don't know if this is the bottom. It's still way too early. Again, look at the weekly 8 and 21. That thing is not ready to go up yet. It hasn't even hit the 21, which tends to be resistance on the weekly chart. Look at that. Look how many times it's hit the weekly 21 as resistance. Now, maybe this time's a little bit different and it'll blow through the 21 a little bit further. Sure, that's good. But how many times, if you guys have been listening to me for a while, that you'll see it hit the 21 and then there will be a pullback? Now the question is that pullback into support and then it goes up? And if it is, then we can buy that. But there's going to be a whole lot of movement in through here, and you're not going to miss the boat. So yeah, we can start watching these things. Maybe the Chinese names are starting to come back alive, and that might be an area to where some strength is. Money has to rotate. Maybe there's a concept that since our stock market, the American U.S. stock market is so high, there's not much value left. It's so high that why would we want to keep buying up there and especially if it's going to be moving down? So where is money rotating? Money is looking for opportunity, and opportunity is when price is down. You look at these things. Well, what's beating up? What is still going to be alive and can be profitable in the future, but the stock of it is down? It might very well be some of these Chinese names because if they aren't going to go completely out of business, then their stocks are just doing the next ebb and flow. If we look, let me zoom out on BABA, because, here's the bottom, here's the top, here's the bottom, here's the top, here's the bottom, maybe we start getting another top. So just look at those bigger overall ebbs and flows. And yes, Chinese stocks might be an area that we start looking to, but for me, I'm not quite ready there. Let's see. What was the other one? TSM. Oh yeah, Taiwan Semiconductors. Yeah, that one's looking pretty good. Which I know interest rates are going up, and it tends to put a bit of a squeeze on tech and all that. But I gotta say, Taiwan Semiconductors are looking pretty good. We are trading the semiconductor space. We've got a couple names in through there. There was a bit of a head fake. I think it was last week. You could see that Taiwan Semiconductors, nice move. Look at that right there on the hourly chart. That's what I call a trampoline move. Price below the 50, but the Moxie indicator above 0. Boom, big move up. And then it had almost as much of a move back down. Turned out to be yet another trampoline move. Price below the 50, the Moxie indicator above 0. And now we're back up. And you got to say, there's a lot of volume coming in here. There really is. It's a lot of volume. So, I mean, look at that. That was a weekly bar. Look at that. That was huge volume on a weekly bar. So yeah, I think that something's going on with Taiwan Semiconductors. It's got earnings, so just be careful about that. Anything can happen on earnings. But yeah, semiconductors are looking good. AMAT. AMAT looks pretty much like the ETF, and the ETF is SMH or SOXX. And yeah, look at this thing. It looks almost exactly like the semiconductor ETF. And I'd be looking at this. It has been holding the weekly 21, kind of like what I mentioned with the S&P. You know, and come on, I mean, it looks like it's trying to break out. It's held the daily 50, then had a bit of a fake out here. I would say that this should be a trampoline move on the daily chart. So remember, trampoline move, price below the 50, but the Moxie indicator above 0. Yeah, I mean, if this thing continues to move up on that trajectory, then it should be okay. We should be good with this. So yeah, semiconductors are looking fairly decent. Now, Lucid, Michael, I know that Lucid is moving up. I'm not quite ready to get into this yet. I think that there's still going to be a second opportunity. And what I've been telling people, the reason I'm not quite ready for it is because the hourly 200 is still in a downtrend. Very similar to back here. I'm going to wait a little bit longer and see if there's a pullback into probably the hourly 200, like this. And if it does pull back into the hourly 200 and sets up again, then I'm willing to take that trade. So there could be still a little bit more upside on Lucid, but for me, for what I think that is going to be the next bigger trend on Lucid, I don't think it's quite there yet. So just for whatever your position sizing is and however your trade is, yes, there has been a good move over the last couple days, but I think that there's probably going to be a pullback, and I want to see if that pullback is into strength, and then we'll set up for the next bigger move. All right, then we get over to RIOT. I don't think that there's much to say about RIOT and the crypto space. Again, not quite ready to get into these things. You're asking about the 15-minute time frame, so maybe it sounds like you're a much shorter term trader. If you are, fantastic. But for me, as far as seeing the next trend, I don't see it yet. The daily chart still has a lot of work to yeah, okay, we're on the daily chart. So the daily chart still has a lot of work to do here on RIOT. That 8 is still very far below the 21. That tells me it's got a pretty robust downtrend. Now, yes, we are seeing some positive divergence on the hourly chart right there, but that could just be flagging. I'm not quite ready to say, okay, this thing is going to be in an uptrend. We are still running into possible resistance at the hourly 50. Now, if it is able to go up, then I would be looking at the hourly 200 as the next area of resistance, which I wouldn't be surprised. That's probably, let me get my cursor. It's about not quite the same area as the daily 21, but it's kind of close. So, and then you're talking about the 50, 250 on the 15-minute time frame possibility, because here's the 50, 250, that worked, but this one didn't. 50, 250, and you can see this one, 50, 250, didn't work. And then you can see 50, 200. Well, we're not quite confirmed yet. So I don't know. This is the kind of stuff area where it's just a little too muddled. There's too much random movement going on here, and so unless you're like a day trader, basically, I just don't see any multi-day trends or opportunities on something like this, and I just don't think that the space is quite ready. So I haven't been taking a look at that. Oh yeah, so Michael, yeah, day trades. You want to take a look at this? Yeah, I actually just posted this to my subscribers the other day actually I think it was on Monday. Let me show you the SPY. So, Michael, if you pick up the Moxie indicator, or if you already have it and you take my classes and my education, all that stuff, everything I teach, now I normally teach on the daily, hourly, and 15-minute time frame, but everything I teach, all of the principles that I use, you can apply to the lower time frames. And so that's really the beauty of what I trade is it's called Fractal, because you can take the same concept and you can apply it to any time frame. You can apply it to the weekly, the monthly if you want to, the daily, the 2-minute, the 15-minute, the 22-minute, like whatever you need. The concepts are the same. So how about this? You know my elf shoe pattern, right? How about this? And this is the 15-minute time frame on the far left. This is the 5-minute time frame in the middle, and this is the 2-minute time frame on the right. So this is day trading. And you want to see what the setup was? This was on Monday. Here's the leg, here's the heel, here's the arch of the foot, there's the ball of the foot, there's your elf toe. Great day trade. You want to see what else this setup? That ball of the foot on the 5-minute elf shoe was a trampoline move on the 2-minute. So you want a day trade? It's right there. You got it. And then you can see exactly where that setup was. Is when the 8 crossed over the 21 and price got back over the 2-minute 50. And you could see that this thing was working or coming into it because of those 2 time frames, each telling you about those various setups that I like to use, the elf shoe and the trampoline move. They're right there. So that worked out very nicely. And then as far as the continuation, price bounced right off of the 5-minute 50, which for this one is the equivalent of the 50 250 maneuver. So all these concepts that you guys see me talk about on the higher time frames, it's all right here. It's on the 5 minutes, on the 2 minute, like you name it. It works out really well. All right, guys. Well, I'm going to be ending it there, and yeah, we'll get kind of. Let's see what this market has. We have Monday as a holiday. If you guys have any questions about me, the indicator, whatever, you can come over here to profitpilot.com. And other than that, we will see you guys next week. Loco no Joko, looks like you're coming in here a little bit late, but yeah, come on, I'm here every week. You guys should be knowing these times. Set your alarm to it. We do it right on the dot at for me 8:30 on the West Coast time every Wednesday. Just make it a calendar appointment, and I'll see you there next week. Loco no Joko. All right, guys, thanks again.